Hello everybody, this is Dhritiman. You know me as Gamma Pahalwan from Twitter. Today there was Kora spoke about gold bonds and buying gold during his PM show in Watanabe. And while listening, I realized that there were a few points that had gone missing in translation. So I took it upon myself to make a short video to try and explain the different concepts of buying gold. I don't have a vast experience, but in the last 2 years, I have focused on this, the logistics of purchase, basically, quite a bit of precious metals. And let me share a bit of my expertise with you guys. I'm sharing my screen now. Okay. So the first thing that we need to know is that there are broadly 4 avenues in which you can buy gold. The first avenue, of course, is your sovereign gold bonds. The second avenue is your gold ETFs. The third avenue is your physical gold and silver bars, specifically for gold bars and jewelry. That's physical format. And the last one is digital gold. Basically, you buy it off some company which stores the gold for you. And you can buy and you can sell it back to them whenever you want to sell it. Now, of this, there are quite a few concerns. Specifically, there are safety concerns, there are economical concerns, logistical concerns, etc. So we'll be going through them one by one as I speak. Now, first, let me speak about the physical gold because that's the format that most people know them with. Now, in the physical format, the gold can be bought in as bars or coins, or it can be bought as jewelry. Now, when you're buying it from buying it form of jewelry, so you're paying quite a bit of making charges on top of the premium that the refiners and the smelters would be charging to refine the gold on top of the MCX futures price. Okay. So because of that, approximately 5 to 10% premium usually is there over the MCX spot price. Beyond that, you have to remember that that's not the only expense you'll be paying. You'll be paying a 3% GST to the government also. So because of that, it becomes very uneconomical to buy gold for profiteering perspectives. Okay. Now, still, there are a few benefits also that many people have the concern that if I'm buying the gold and somebody else is storing it, then I have got counterparty risk. So in order to counterparty risk, many people are willing to pay that extra premium. And kudos to them, it's their money, their choice. But if you are buying it, you need to buy it from a proper place. Okay. So that the safety aspect is there. You have to ensure that it is hallmarked. And for investment purposes, please don't go for jewelry. It is pointless. The jewelry is usually 18 karat to 22 karat. And for investment purposes, you should go for 24 karat, where you have the best bang for buck when you're trying to sell it. Okay. Next important thing, where do I buy my gold from? So there are 2 avenues. So in this, I'll be mixing up a little bit about the digital gold also. Now, the digital gold companies, there are many digital gold companies in India. The one that I follow is called Goldella. Earlier, they were known as Augmont, and they are a part of Bullion India Association. Now, this is their, this is their website. So you can buy gold or silver from them at the prices which are shown here. They constantly change throughout the day. And as the MCX gold price goes up and down, and you can buy it from them at the price which is shown here, but with the caveat that you have to pay 3% GST extra on this price. Okay. Now, the benefit of using these platforms is that you can buy gold in very small denominations. Okay. Now, suppose I have a view that the gold price will fall in the next 1 year. Suppose that's my view. I want to keep accumulating gold, invest in it for a later upside. Okay. So for buying that, just like an SIP, you can actually time your purchases. Like suppose the overnight in the New York Mercantile Exchange, the gold price suddenly crashes, or in the LME, the price suddenly crashes. Okay, you get a 2 to 5% downdraft there, 2% suppose downdraft. Okay, so at that point of time, you can buy a small amount of gold. Like you don't need to buy do a large purchase in one go as a lump sum. You can buy a small amount, like 1 gram worth maybe 5,000 rupees, or even a half gram worth 2,500 rupees, something like that. Okay, so you can buy in very small denominations, and that is not beneficial when you are trying to buy directly as a physical. If you are buying directly as a physical, remember that whenever you are buying the gold in smaller denominations, as a percentage of your cost, you are paying a higher amount of making charges. Okay, so it's always beneficial to buy a larger quantity when you are buying directly physical. But if you want to buy a small quantity and keep averaging down your price, go for these sort of services, that is your Gold Ally. Okay, I'm not affiliated with them. I have used their service many times. That's why I'm telling you. So after you have accumulated a certain amount, you can order it physical to your place, to your address, after paying a small making charge. Okay, so the making charges and all are available in their website. You can check it out. Depending on your amounts, you can decide what denominations you want to buy it at. Now for gold specifically, this is the best place to get the cheapest gold, frankly speaking. Okay, beyond that, there are other avenues available, such as Coin Bazaar. Just 1 minute. Such as, such as Coin Bazaar. So here you can see that you can buy the gold in smaller denominations also, depending on whatever you want to buy. There are multiple sellers. It's basically an aggregation of multiple retail sellers of gold coins. So you can check out whichever ones you prefer. Like the MMTC one would be quite a bit more expensive, but you are getting a government guaranteed gold, which will be hallmarked with mostly it comes also with a serial number. The rest of them, they don't come with serial numbers usually, but you can check out based on your price and whether you know that company or not, you can buy out the gold. I buy usually from Augmont, so or Gold Ally basically. So because of that, I have not checked out the gold markets in Coin Bazaar, but you can try it out if you want. I have tried their service, Coin Bazaar service for silver, and it works. You get the cheapest silver, literally the cheapest silver at Coin Bazaar. So that's why I've opened up the silver page here to just to highlight. So you can see that the silver bar, the cheapest silver bar here for half a kilo of silver is 32,886. Okay. Now you check out anywhere else on the web. If you are getting a hallmark silver bar for this cost, I can guarantee a new silver bar. I can guarantee you won't get it. Okay. Beyond that, there was another avenue that I used to prefer. That was buying from the Bangalore Refinery. The Bangalore Refinery was the second cheapest one after this. Now in the Bangalore Refinery, there are two ways you can buy it. One is you can buy it through the BRPL shop itself, the online shop. Now, when you're buying it from the online shop, it is far more expensive, so I would not advise it. Better than that, try to find a jeweler near your location who already has the BRPL, who is basically who deals with BRPL directly. Okay, so from them you can actually buy it off the rates which are published on the pages on the BRPL website itself. So you can see bangalorefinery.com. On this, if you go to today's rates, you'll be getting the prices of gold and silver for various denominations. Okay, so these are non-tax inclusive, tax exclusive prices. So you can add on a 3% on that. You'll find out that the silver here might be cheaper than the RSBL getting on the Coin Bazaar, but if you do not want to have the hassle of going to a jeweler, then you can directly order from Coin Bazaar itself. The RSBL is the cheapest. Okay, now I think I've spoken quite a bit about physical gold and silver. Let's go on to the next topic, that is your gold ETFs. Now the prototype of gold ETFs, you know, is gold bees. So whenever you are buying a gold ETF, of course, you'll be paying a bit of expense charges every year. That usually ranges between 0.5% to 1%. The gold bees has got a expense ratio. Just let me show you. The gold bees has an expense ratio of 0.83%. So 0.83% you'll be giving every year to the Nippon company. Okay. Beyond that, one important thing that I want to show you people is that you can see that the gold piece is priced 43.82 rupees. Okay, now that is although it is close to the gold price of 50 rupees per milligram, but it is quite a bit far off also. Like you can say almost 6 to 7 rupees away from 1 milligram of gold on the spot market. Okay, so why this happens is that whenever these gold and the authorized participants for the gold ETFs, okay, they have to redeem the shares, or they have to issue more shares based on the market flow, basically the money flow to and from them in the market hours. Okay, so these purchases are done on an aggregate basis at the end of the day usually, or at the end of a week, or at some point in time. Okay, so because of this, they can incur quite a bit of loss if they issue the shares at some point of time at some price, and then the price shoots up when they are trying to buy it in the physical for backing up these shares. So because of that, quite a bit, they are open to quite a bit of losses. Okay, so to reduce those type of losses, these people usually hedge their purchases in the gold futures market. Okay, so because they hedge it, they'll be forced to pay the carry. Okay, when at the end of the when the future cycle finishes. So because of that, it becomes a slightly costly endeavor, and because of that, there will be a difference in the price. Okay, the money basically is flowing out from your pocket into the fund manager's pocket. The fund manager takes his 0.8% every year, and beyond that allocates it to buy gold, and along with the buying gold also hedges in the futures market, where you also lose money. Okay, so because of that, the price of the gold ETFs will always be less than the price of the gold in the spot market. Okay, it is opposite to, you can say, the other ETFs like Nifty ETF, which usually trades at a premium to the spot because of dividend yields. Okay, it is similar to that basically, just the opposite. Okay, now this is a theory that I have read. I don't really know what happens in the background because I have not really worked in that industry. I'm just giving you what I understood from my reading and listening to people. Okay. Now the last topic that I'll be talking about, I know this is a long video, please bear with me. I'm coming to gold bonds now. So the last part is gold bonds. The gold bonds are issued by the RBI. They are issued at an average price of the last 7 days of gold spot price. Okay. Third thing, they are issued for a duration of 8 years, and at 5 years you can give it back to the RBI or redeem it for whatever the price of gold is at that point of time, or you can choose to hold it till 8 years. Okay, you get a biannual interest rate of 2.5% on it. Okay, so these are broad things about SGBs that everybody knows. I'll be giving you some extra insights into which SGBs to buy and how to buy. Okay, now SGBs can be bought by multiple methods. First is at the time of issue. You can buy it directly from the RBI via your demat account, or you can buy it from the banks who sell the SGBs as part of their retail sales practices. Okay, so these are at the time of issue. If you are buying it off the banks, you won't be able to sell it in between, even if you want to. If you are buying it from the RBI directly in your demat account, you can sell it to some other market participant somewhere down the line. Okay. Third, you can buy it directly off the stock market, the financial markets basically. So if you buy it directly, then you can assure that you will be getting a better price for your purchase. Okay, now remember that remember the 2.5%. The 2.5% interest is given on the issue price. That is a very important thing to note, especially for large volume buyers. Okay, so the issue price. So because of that, what has happened is that the highest issue price of the gold bond till date has been the August 2028 issue. Okay, the fifth issue of 2020. So that one specifically came at an issue price of 5,200 something. Okay, so now when the price of the gold came down after the issue, Okay, a lot of people lost quite a bit of money, and it still trades much below that. Okay, so you can see here, I have opened up the gold bond. Here you can see the gold bond. This is the SGB August 28V. This basically translates to the August. SGB is the sovereign gold bond. AUG is the August issue. 28 means maturing in 2028, and 5 means the fifth tranche of that year. So fifth tranche of 2020, which was issued in August, is this gold bond. You can see that the last traded price was 4,793 rupees. Now the price of this will keep going up and down as the gold market goes up and down. But the thing I want to show you is that since the interest you get is on the issue price, you will be getting the par value of this is the issue price, that is 5,284 for the August. Now the current price of this one is, let's check it again. The current price of this one is 4,793 rupees. So 4,793 rupees. The coupon rate was 2.5% per annum. And because of that, you are getting a current yield of 2.76% compared to 2.5% if you had bought it directly from the RBI. Okay. So the thing is that you can get it at cheaper prices also if the gold price falls. So I had bought it when the gold price had fallen below 4,600. Sorry, the bond had fallen below 4,600. So at that point of time, you can see that you are getting an effective yield of approximately 2.9%. Now that's quite a bit if you are buying a large volume buyer of gold. Okay. So because of that, I prefer to buy it directly off the secondary market rather than primarily from the RBI. Okay. Now, another important thing to note about SGBs when we are buying off the secondary market is liquidity. Okay, the liquidity depends on how many people participated in the issue at that point of time. Okay, now the highest volume participation by retailers happened at exactly the peak of the gold market in 2020. That was August 2020. And a lot of people participated in that, and many of them lost money later on when the price immediately afterwards fell. Okay. So because of that, the liquidity, since the ownership is high in this tranche, the liquidity is also highest in this tranche. So the ability to get a good bid-ask spread is there in this specific tranche, that is SGB August 2028V. Okay, that is the fifth one. Okay. Now, just to illustrate this, I'll show you that you can see the total volume traded. This is the July issue of the same year, just 1 month before. 1 month before, the volume is 625. For that of the August, 1,500, quite a bit. The September one, 533. So, and now let me show you that of November, 11. And the October one didn't trade at all. So you can see that the liquidity is highest in that one. You'll be getting better price in that one. You'll be getting a better yield on that one if you can catch it at a lower price. So I would suggest, if you are going to buy SGBs, please buy only this tranche. Okay, from whoever is willing to sell to you, of course. Okay. Apart from that, there is one curious behavior. Now, how to time these purchases? I'll tell you one more thing. Now, there is a curious behavior of these bonds is that the price of the bond falls at the time of the interest rate date. Okay, so the interest on this is paid biannually. For the August bond, it will be given in August and in February. So the price, so suppose in February, the government, the RBI issued the interest, the price of the bond will fall. After that, it will slowly keep going up until August interest rate date. Again, the interest will be issued. The price of the bond will fall. Again, it will keep climbing. So it is this sort of a pattern which happens. Okay. So because of that, try to time the purchase immediately after August or immediately after February. Okay, and more so if the price of the gold falls during those times. Okay. Although there is no specific benefit to that, because you are anyway getting the money back in form of interest, but you will be paying a tax on that money anyway. So might as well time it to the next cycle, just to reduce that interest rate burden. Okay, sorry, the tax burden on the interest. So that's it from me about SGBs. So I hope you found this useful. and please share. If there are any criticisms, please comment, and thank you for listening.